If you've considered any alternative lending source but haven't checked out Torro.com, this review of Torro is going to be for you. My Torro review will explain a few of the things that make Torro a unique alternative lender, and I think you're going to be interested to hear about those. Before we get going, let me tell you something about myself. I'm not a licensed credit advisor. This is my own opinion in this review. The review isn't even sponsored by the company I'm reviewing, Torro. It is, however, sponsored by BestSmallBusinessLoans.com. BestSmallBusinessLoans.com is a must-read site if you're looking for information on alternative lenders. Here's what my review is going to cover. What is Torro? What loan types do they offer? What are their strengths and limitations? What's the application process like? We'll also talk a little bit about their rates and payments and what customers who have used Torro have to say about them. I think you'll find it interesting. Let's take a look. To begin with, let's explain what Torro is. It's an alternative lender. Here's what you need to understand about Torro and any alternative lending site. This is a company that doesn't want to bog you down. They want to be able to get you your money quickly, and they want to be able to help you achieve what you need in your business. Whether it's startup capital for a brand new business or a loan to help an existing business that has an excellent opportunity, Torro focuses its resources on trying to help people in either of these conditions get the funding they need fast. You can get a loan anywhere from $5,000 to $500,000 through Torro. All you need to get started is to go through their application process. It has normal underwriting standards and credit approval. However, when you apply for a loan with Torro, you don't have to get a hard credit pull. So you can actually find out whether or not it's a good solution for you without even having any impact on your credit score. So you can see what Torro's strengths are: their flexibility, their quick, rapid processing, ease of use, and that they don't have any kind of requirement on what you use the money for. They're not going to constrain you by telling you you can only use their money a certain way. A lot of alternative lenders like to divide up all of their different loan products, but Torro just divides them into these two: startup capital and working capital, for businesses that have been running 6 months or more. Startup capital loans are similar to a line of credit. If your business has been going less than 6 months, they can still work. They like to see revenues of $5,000 a month. However, they will talk to people who are even what they call pre-revenue stage. Their credit score requirements are a little higher than most alternative lenders. They want to see at least 700. So that's an important point. It helps you understand that this company is used to dealing with successful business owners, and that means they can move fast because they're on board with you and your business ideas. Startup capital rates and fees are judged this way by Torro. Torro will use term lengths from 12 to 48 months, which is kind of amazing to think of offering a startup business. The repayment period can vary monthly or weekly or even daily if necessary. But as you might suspect, any business that's going to get money to you that quickly is not going to give it away for free. The APR range can be as much as 36%. So it's really a good idea, if you're going to take a loan like this, to have the opportunity to be able to pay it back early, so you don't have to extend it out and pay the full term of interest. Working capital loans are for existing businesses that have been around longer than 6 months. They have a monthly revenue of $10,000 or greater, and the better the credit they have, the better the rate. The rates and fees for working capital loans are a bit of a weakness for Torro. Let me show you what I mean. First off, the rate you'll be offered will depend on the credit score and business health as specified in your application. Now, that can be good, but you don't have a really good idea beforehand going into it what it means. I will say that information on their website shows that the rates could be anywhere from 30 to as high as 50% annual. Something else that's important to know is that even if you are approved for a loan, you will be charged an origination fee of 5%. That's right off the top. So even if you get the loan and pay it right back immediately, you're still going to be paying 5% just for getting the loan in the first place. It's further worth noting that automatic deposits and withdrawals also have fees associated with those. That's a little unusual. I haven't seen that with other alternative lenders. So let's talk about applying for the loan. It's very simple and it's very fast. That's a big strength. And as mentioned before, it's just a soft credit pull. It's worth looking into if you think it might fit your circumstances. Some customers report that they are able to apply, get approved, and get funded all in the same day. That's probably an exception to the rule, but even so, it gives you an idea how fast Torro can move. Specifically, if you're applying for a working capital loan, they are looking for a minimum credit score of 680 and a minimum annual revenue of $120,000 annually. Like we mentioned before, $10,000 a month. Let's take a look at what the application process looks like. It's pretty simple. There's a nice form to fill out, and you can specify how much you're looking for and whether or not it's startup or working capital. Basic stuff here. What's amazing though is that it doesn't go much deeper than this. You put in your personal credit score and some contact information and they get back to you. I mean, that's all there is to it. It's one of the shorter, quicker application processes I've seen. But with that speed, there's a trade-off. The rates can be kind of high if you carry the loan to its full duration. So that brings us to this. Who does this loan solution work for best? I would suggest that it works best for either startups that have an excellent opportunity but that they need to move fast, or an existing business with solid opportunities that have consistent revenue with a potential windfall in the near future. Now, if you have a business, just as an example, that works with flipping real estate, and you come across a fantastic deal which you know you can acquire and then close for a profit in a very short period of time, well, that kind of thing would make Torro a potential alternative lending solution for you. But if you don't have a business that has a clear-cut benefit coming and you feel like you can easily steer your way to receiving that benefit, then you're going to be taking a risk, because like with other alternative lenders, the fees can be high if the payback process drags out long. That being said, let's consider what customers who have used Torro have to say about this. Torro customers report that the company has good customer service, a 4.8 out of 5 on Trustpilot. On the flip side, the rates can be high, and customers do point that out in their reviews. That being said though, let's take a closer look at what the review data says. Out of over 500 reviews on Trustpilot, 95% rate the company as excellent. I took a look at the bad reviews and found that most of them were disgruntled because they couldn't get the loan. Very few of them had problems with the processing and carrying out of the loan or any of that. If you look at the Better Business Bureau data, you'll find that their reviews are similar. 4.72 out of 5. That's based on 100 customer reviews. There have been 7 complaints, only 7 complaints in the last 3 years, but they've all been closed. And there's only been 1 complaint in the last 12 months that was registered, but it is also closed. So overall, it's a pretty good track record. You'll want to check out what the full review has to say at bestsmallbusinessloans.com. I think you'll like what you see.